Hi, I'm Teresa Powell, and I'm with Todd Novosel with NFM Lending, and Todd's going to answer a few questions that many consumers have about special mortgage programs and buyer considerations. All right, Todd, so our first question is, are there any current mortgage programs that would benefit for first-time home buyers, and what they need to know about those?
Yeah, so we have a wide variety of first-time homebuyer programs. A lot of them are income-based programs, so depending on how much you make, if you're under a certain threshold, you actually can get $2,500 towards their closing costs.
Okay.
Depending on the income level, there's a program that allows us to give them $1,500 towards their closing costs. Again, this is no change in interest rates. They don't paying anything extra for it. It's just based on income. If they're a first-time home buyer, we can look at down payment assistance programs that we can get them money for their down payment, and depending on profile, we can get them extra money towards their closing costs as well.
Okay.
So a lot of different first-time homebuyer programs that can help with, I don't have a lot of money to put down. We've got some solutions for them.
Yeah, because they're not coming from where they're selling a property. They've had the opportunity to build up equity. So those first-time homebuyer programs, I mean, they're extremely beneficial for many buyers today.
Exactly. Another option will be if they're a veteran, they've served our country, we offer what's called a veterans loan, commonly referred to as VA. Fantastic program, zero down, so we don't have to worry about down payment assistance.
Wow.
Great interest rates under that program, and from a fee perspective, we actually waive our processing fee for any veteran, so it reduces their overall cash needed for closing.
That's what we like to hear.
Yes, absolutely.
Save some money. Okay, now how does a renovation loan work, and what type of buyer would you recommend that for?
Yeah, so a renovation loan in simple terms means that we're able to include a contractor in the process to do work on the home after the closing. That contractor will come in, provide a formal bid of what the work is going to be, and then we will submit the contract and that bid to the appraiser and ask them to appraise the home subject to the work being done. A really easy way to explain that, long-winded way would be take the purchase price, the renovation costs, there's some contingency reserves, some fees associated with all of that. It's a more lengthier process because we're actually closing before the work is done, and then money is set aside for the draws for them to then be paid out to the contractor as they're continuing to do work on that home. And then ultimately they have one loan up front that is in place for the life of the loan, so they don't have to come back and redo anything. It's all in place.
And what is the closing time frame on something like that?
Great question. If a client is buttoned up, about 45 days. They've got to have a contractor come in immediately once they're in contract, submit that formal bid. I do allow for some leniency in that. I tell agents typically give us 45 to 60 days for a renovation close.
Okay.
Massive benefit though is you're able to take a house that needs some love and actually purchase the house and give it the love that it needs post-closing.
And that's what I tell my buyers is, we'll go into a house, I'm like, okay, this one needs a hug. Or, but you can do this, and then your resale, your property value would increase to this. And so we look at all those factors. And so like a rehab loan is amazing for that because it gives them the opportunity to be able to get give it the hug that it needs and make it into their dream home and not have to worry about coming up with the funds later or living under construction for an extended period of time.
Yeah,
so
exactly.
I love those loans. I think they're fabulous.
Yeah, it's a good loan.
Now, okay, so the last question I have here is, are there good mortgage options for self-employed clients, and are there any specific challenges that they should be aware of?
Yeah, so self-employed borrowers, there are some challenges that we need to be aware of. The biggest one being they have to be self-employed for 2 years. We have to have 2 years tax returns to calculate income. So that's going to be the biggest thing. Now, if a self-employed borrower has more money down, we do have one avenue where they can be self-employed for 1 year. But traditionally speaking, 2 years tax returns allows that client to qualify for any of the traditional mortgages if you were just a salaried employee.
Now, I remember when there were no doc loans. Are those still a thing, or are those completely gone? Am I dating myself?
Those no longer exist.
That's probably a good thing.
And yes, obviously we learned a lot back in 2008, and we had a lot of loans where people would just state what they made, state what was in the bank, and we would close that loan as long as they had a good credit score.
It caused a lot of problems.
It did. The mortgage meltdown, look it up, 2008. So yeah.
I lived it. I remember. It was horrible. All right. Well, thank you so much.
Absolutely.
Stay tuned for more mortgage tips, and please feel free to reach out anytime if you have any questions.